This video explains intraday trading with Alpha 2. If you're only interested in intraday trading, please review the 4 higher time frame videos listed inside the magenta box. Decimal principles are largely time frame independent, and those 4 videos are prerequisite for a complete understanding of the intraday trading with Alpha 2 video you're about to see. Before we begin, please note there are written transcripts posted on the website below each video. A brief review. Decimal Strategic generates 2 contextual signals called Alpha 1 and Alpha 2. Alpha 1 has a more strategic orientation and is explained in the first 3 videos. Alpha 2 is more tactical in nature and is explained for daily weekly time frames in the previous video titled Tactical Trading with Alpha 2. While Alpha 2 is explained for intraday time frames here in this video. All of these free training videos can be found by going to the resources section of our website and then selecting decimal training. These algorithms derive from synergies possible due to combining multiple models which are adaptive, interactive, and unconventional. For a general explanation of these multiple models, visit the resources section of our site, then select publications and look for decimal submodels explained. In the last 2 videos, Strategic Trading with Alpha 1 and Tactical Trading with Alpha 1, we introduced a model schematic or construct as examples of ways to think about combining submodels or multiple models as a basis for developing a strategic or tactical protocol or procedure. So let's jump right in and describe a model construct for intraday trading with Alpha 2. We will then specify a rule set for Alpha 2 to determine what a compelling intraday tactical trade opportunity might look like. We start with the Alpha 2 algorithm, and note this is itself a pairing of at least 2 unconventional models, yin-yang dynamic and clock rotation, which you're familiar with from previous videos. Next, we enrich our schematic by pairing Alpha 2 with a semantic pattern idea drawn from a semantic rule set called the laws of trend dynamics. The first law of trend dynamics states simply that time conditions and affects the potency of all price movement. From this first law semantic, we have developed and refined 2 submodels. The first time-based submodel, derived from the first law, is a time of day rule set, which serves as a conditioning element or trade selection filter. In other words, we weight signals, accept or reject them relative to when they occur according to volume and liquidity. Think of them as high energy zones during the trading day. The second time condition submodel involves time of bar, or qualifying intraday bars by virtue of reaching specific time thresholds, simply time elapsed in terms of X amount of minutes. This enhances the signal to noise ratio. So the first law provides 2 different filters that use time as a conditioning element. The second time-based submodel involves time of bar, or qualifying intraday bars by virtue of reaching specific time thresholds of time elapsed, X amount of minutes, to enhance the signal to noise ratio. So the first law provides 2 different forms of information that use time as a conditioning element. In this video, we won't go into a lot of specifics of these time-based submodels. However, a course titled First Law and Intraday Trading will be available on a limited basis in the resources publications section of our website. Since we are pairing Alpha 2 and the first law in a tactical setting, their potential can be maximized by integrating a higher time frame strategic point of view. Since we are trading at an intraday tactical level, it's helpful to at least incorporate daily price action analysis. Different versions of Decimal read different time frames of data. So if you have a version of Decimal that reads both intraday and daily data, then do your daily analysis using Decimal software. Otherwise, you can alternately use your most effective existing analytical methods applied to daily data and use that as your strategic point of view. Last, but certainly not least, the genesis of all profitable trading is risk-reward analysis. So we insert that into the core to provide the key framework for discipline and quick actual order placement. Note the following. There's a key difference between the operation of Alpha 2 in higher time frames versus lower time frames. While Alpha 2 signals in the weekly realm demands activation by price action at a sub-time frame level, meaning at a daily level, In the intraday realm, the pairing of the first law semantic with alpha 2 mitigates the need for subtime frame validation. Validating an alpha signal by using lower time frame price action is covered in previous videos. The default rules set presented here for alpha 2 intraday is customized for US stock index futures. It begins with pre-opening preparation. The first action is review the key levels in your intraday playbook. We produce a publication in the resources publications section of our website called the Intraday Playbook, which provides specific price levels for the S&P 500 that carry over from prior days. This is provided free on a delayed basis or available pre-market for a nominal fee. This is just an example to emulate, but everyday traders should have a playbook that has important price levels listed, because when price moves trends up or down, you need to be aware of price levels outside of overnight price action. Next, assess daily and weekly charts for HTP, which means higher time period levels, and visualize both bullish and bearish scenarios. As we noted in the model construct diagram, to maximize intraday trading, it's important to have an idea of what is happening on a higher time frame level on a daily or weekly level. A professional intraday trader will visualize both bullish and bearish scripts for the next trading day. It is important when day trading to minimize being with form, which means embracing a fixed idea or bias that is strongly bullish or bearish. The best traders are very formless, meaning they trade with the tape and order flow with an unbiased point of view, which is easier to do if one is not wedded to a bullish or biased outcome for that day. Only be bullish if the tape is bullish, and only be bearish if the tape is bearish. Next, check overnight price action pre-open. Part of the pre-opening homework for an intraday trader should include a quick pre-open assessment of the overnight price action for coincident indicator markets, meaning key currencies, global stock indices, and U.S. debt markets that tend to impact order flow. Next, note overnight or prior day levels created by key alpha zones. Part of being an effective intraday trader is to be aware of levels highlighted by decimal to the left of the price action you're watching. I'll give you an example in a few minutes. Number 2 is to focus your mental energy relative to a time of day rule set. As an intraday trader, it's important to distribute your mental energy relative to a time of day rule set. We teach this in a course titled First Law on Intraday Trading. However, this simply means to be very focused on certain times of the trading sessions that are most important and place less importance on other times of the session. There are 2 reasons for this. 1, trades that develop in key periods of time during the session will have more potential and a higher win ratio. Number 2, intraday price action can develop in a flurry over the course of a few short minutes. Therefore, it's difficult to stay intently focused for every minute of the entire session each and every single trading day, so conservation of energy is useful. Next, number 3 is to scan for alpha 2s, look for fire or tree bars that appear in 2 or 3 o'clock positions at vector 2 or vector 3, coincident with matching sellers or buyers at 3 or 4 o'clock. Number 4 is to draw potential risk-reward grids ASAP, as soon as possible, to anticipate risk-reward, order placement levels, and to size the trade. As potential alpha 2 signals develop, you should be drawing potential risk-reward grids to price targets you have noted earlier in this session. Number 5 is to place orders and execute. Once your risk-reward grid is in place, then, if price tests the alpha entry zone, then place your entry and stop orders, and if the entry order is filled, then place your take profit order. Intraday price action in alpha zones are often fast because profit opportunities are transient, so you must be very quick and agile at order placement. Finally, you manage the trade or core unit if you're trying to let a profit run. Outlying intraday profits often develop as handoffs occur between intraday price action and higher time frame price levels, and this is where your preparation relative to time frames above the intraday pay off. So let's put this rule set to work. This chart is a 30-minute S&P 500 E-mini futures chart that includes overnight price action from September 2015. Let's assume we've already done our homework and preparation. If we've done our pre-market homework, we note that going into the NYSE open, there was sequential selling pressure. We also call that line pressure at X3, X2, and X1. Recall from a previous video that when a vector dot appears with a black dot inside, that indicates a reset to a new 1 o'clock position in the rotational clock. Notice the series of green dots with black dots are indicating sequential resets of the clock with no buy-side rejection whatsoever to the upside. This illustrates a type of selling climax. But looking further to the left and above, I am anticipating if a move back up does occur out of this selling climax after New York opens, what type of upside targets are already in place. I can see an alpha zone target in place overhead between D up to E, as that is where the fire bar developed from the overnight high. And I know that the zone between the high of the fire bar at D and the 3 o'clock vector at E may get sold. The open in New York occurs in the bar with the white dot above V1 at the bottom of the chart. The price action after a certain number of minutes has elapsed after the open falls into an important first law time of day rule set, so I'm keenly focused on price action while noting post-open breadth and volume metrics just to get a sense of order flow in terms of whether selling or buying is lopsided. So we see rejection developing in the bar above V1 versus the last reset bar at X1. And it's occurring in the 1 o'clock position. So as the bar directly above V1 is developing, and before it even closes, I'm already anticipating a possible low at the bar labeled X1 and drawing my risk-reward grid off that low up to possible upside targets just in case this rejection sustains to the upside into a tree bar. We get an impulse to the upside in the bar at A after the initial opening 30-minute bar, and right as it closes near the low of that tree bar, decimal paints that bar green, and I have an alpha 2 signal at hand because there's a green tree bar in a 2 or 3 o'clock position with clock buyers below at 2 or 3 o'clock vector 2 and 3. I know this also fits the time of bar rule set, meaning this bar is a 30-minute bar, so it well exceeds my threshold number of elapsed minutes for the bar to form as a meaningful bar. The only question is risk reward. Well, I know I have my minimum expectation, which is to tag the high of the tree bar T, and before that tree bar even closes, I've already drawn the grid in place up to the current high of the tree bar, so I can go long the S&P right after the close of that tree bar as price enters the alpha entry zone between A to B with a stop below the swing bottom at S. I have a high probability of taking a partial profit at T with an even larger profit overhead. If I am fully prepared and focused, then I've already anticipated higher target levels above which formed overnight, so I have a secondary target zone above at D and E formed by the alpha zone rules defined in earlier videos. So I quickly stretch the grid up to D, and at a glance I can also see a 1 to 2 risk reward on the other part of the long. I booked the first profit at the high of the initial tree bar that generated the alpha 2 and have a lock on a no risk long and close the rest of the position into the second higher target at T. Under certain conditions based on my strategic or daily point of view, I may also choose to hold a core long overnight if higher time frame trends and breadth metrics were also in my favor. Let's look at another alpha 2 trade. This chart is a 1800 contractor volume chart for the NASDAQ 100 futures that includes overnight price action from September of 2015. Let's assume we've already done our homework and preparation. The New York Open is the bar with the white dot. The timeline reads 6:30 at the bottom because I'm in California, which is Pacific time, versus 9:30 in New York. I watch a choppy trading range develop. I would love to catch a termination of this congestion, and the time of day rule set indicates a possible critical inflection point in time. That would imply an alpha 2 signal could catch a transition from indecision, the current range price action, to decision or a trend run price action, and I'd like to trade that if possible. The fire bar at X causes a reset on the next bar V1, which is rejected upside. Buyers defend V2, another positive, and an impulse develops at A, and that impulse forms a tree bar. Remember, trees are green and fires are red, with buyers below at 3 and 4 o'clock triggering an alpha 2 event. This bar also fits the time of bar rule set, meaning this bar exceeds my threshold number of elapsed minutes for the bar to form to be a meaningful bar. The only question now is risk reward. I have a minimum target at the height of the tree bar, T, and since I am decimal trained, before that tree bar even closes, I have already drawn the grid in place up to the current high print so far of that tree bar. I can go long the NQ at X right after the close of the tree bar and it turns green as price has already entered the alpha entry zone between B and C and risk to stop is below the swing bottom at S. I have a high probability of taking a partial profit at T with an even larger profit above. Again, if I'm focused and diligent, I've already reviewed overnight price action before the New York Open and have anticipated the higher target level formed above overnight. So I have a secondary target zone above at D to E because that level qualifies as an alpha zone target according to the rules. And stretching the grid up to T, I can also see at a glance that an entry at X offers a 1 to 3 risk reward, roughly speaking, on the other part of the long. So I booked the first profit at the high of the initial tree bar that generated the alpha 2 and relax a bit, then close the long into the second higher target at T. Whether I take the whole position off as a scalp at the high of the initial tree bar or reach for that higher target at T is best governed by an objective read of the tape. By tape read, I mean to simulate a constellation of intraday data points for market internals, breadth, the type of day that's developing, what the debt markets and currency markets are doing, along with a higher time frame point of view extracted from the daily weekly analysis. Here is a summary of the default rule set for trading Alpha 2 with intraday price action. Rule sets impose a disciplined protocol for execution in the intraday realm, which can be fast and furious. And to reiterate an earlier point, intraday trading has the potential to generate outlying returns. However, it is most effective if integrated with an objective read of the tape, along with primary focus concentrated on specific time of day rules. One question that may come to mind is, since Alpha 2 signals work so well in both higher time frames and intraday, do Alpha 1 signals also work in the intraday realm like they do in higher time frames? The answer is Alpha 1 signals also work in intraday time frames, but Alpha 1 is designed more as a strategic signal generator, so we do not recommend emphasizing Alpha 1 intraday. This concludes the Intraday Trading with Alpha 2 training session. For further study, please visit the Trade Archive found in the resource section of our website and review all Alpha 2 intraday trades in that archive. To explore more intraday trading resources, go to the Resources Publications area of our website and subscribe to the free or premium version of the Intraday Playbook. We also offer a First Law in Intraday Trading course in that section that you may want to purchase with your Alpha 1 profits. Thank you again for your interest in decimal trading tools. Our mission is to empower you to build a profit-driven trading business, one that thrives in all types of market conditions. We hope you allow us to become a valued long-term business partner in building a sustainable, profitable trading business. Good wishes and good trading.